Good evening. My name is Daniel Lopez, and joining me today is Christian Rufin, Wilmer Espinoza, Emily Cruz, and Woodland St. Florose. Today, we're going to talk about an app that we designed called Taxwise. So, what is Taxwise? Taxwise is essentially an app geared towards small business owners, primarily ones that are already kind of filed as LLCs, and they're looking to essentially decide what type of filing status they want to take on in order to save the most money through tax. Now, a quick disclaimer. TaxWise is by no means legal financial advice. As I put it, it's a tool. It's meant to kind of educate you on what the different filing statuses are, how they um, what the different tax filing statuses are, what possible outcomes you could see with your tax, and essentially just give you that like confidence for when you do go ahead and speak to your advisor, um, your, whatever professional route you go through to talk to about this. It's mainly so that you can understand what they're talking about, ask questions, get a better understanding. So that way, going forward and into the future, what would be a better way to kind of manage your business in the regards of how tax is going to work for you. So that being said, how does that work? Well, the app goes based off of four key pieces of data. Those four key pieces of data are going to be your company's annual revenue, how much the owner's salary is, your deductible business expenses, and state of operations. Now, the biggest one of those key four is the state of operation. Every state taxes a bit differently. Um, you might have more tax implications in California than here in Florida. Whatever the case may be, taxes per state is what varies the most. Revenue, salary, expenses, those are pretty much just basic, your super basic, how much money came in, like it relates more towards the actual number side rather than what technical implications they have. So that being said, using those, it's TaxWise is designed to kind of answer the question as to what could be the best outcome for me in terms of saving money and with taxes. And what it does is when you input those key four, it's gonna it's gonna calculate your possible tax liabilities on, your state and how much your revenue was, how much you're paying your pretty much those four key that you're inputting, your expenses, your revenues, and your salaries. It's going to input those. It's going to calculate your liabilities, and then it's going to give you a comparison. And then it's also going to explain to you, kind of like a base general idea as to what LLCs are, what the types of LLCs are, LLC partnerships, things of that nature. And it's also going to explain to you what S corporations are. So that being said, it's really just geared towards small business owners, specifically ones that are kind of just new to owning a business overall. Um, how do they want to set themselves up? What can they see? It's not only limited to just the numbers that your company makes. You can come up with different types of data, explore hypothetical options, change your state, see if maybe the state that you're in is not good for what you want to do. You move to another state and see if that saves you more money, things of that nature. But like I said, it's not legal advice. It's just a tool. It's there to give you that confidence when you go to speak to your tax professionals and to give you that base knowledge so that you can understand what it's going to look like for you in the future. And that being said, I'm going to pass it over to Emmy, who's going to give you a more technical walkthrough and kind of explain how the app works, how it uses the four metrics that you give it to come up with the calculation, and kind of where it's pulling its data from to just, provide all of that information and give you the answer that, maybe you were expecting, maybe you weren't expecting, and so on. So yeah, thank you. We'll pass it over to Emmy. I hope you guys have a good one.
Hi everyone, my name is Emily, and in this section, I'll be walking you through the technical build-out of our app, Taxwise. Before I get into the workflow and the backend, I want to start with a quick overview of what the app is designed to do and why we built it this way. Taxwise is a decision support tool for small business owners. A lot of business owners don't fully understand how the revenue, salary, expenses, and their state they operate in can affect their potential tax savings. So our goal was to create a very simple, user-friendly app that could take just a few inputs and return a clear, easy to understand estimate. Instead of making something complicated with spreadsheets or long forms, we wanted an app that feels conversational, where the user can answer one question at a time and immediately get results without needing to know tax laws or formulas. To build that experience, we used Google Opal, which is the AI version of AppSheet. Opal creates the app structure, workflow, and logic based on the instructions you give it. So the whole build process focuses on defining the inputs, defining the logic, and making sure the user interface stays clean and professional. In our case, the four main inputs the app uses are the company's yearly revenue, the owner's salary, deductible business expenses, and the state of operation. These four variables are enough for the app to generate a simple tax savings estimate and provide a short explanation of how those numbers impact the result. So in my part, I'll be showing how Opal structured these inputs, how it generated a multi-step workflow to process those values, and how it displays the final tax savings estimate to the user. I'll also walk through the logic steps that the app uses behind the scenes, and then I'll show a live example so you can see how the app functions in real time. Now I'll switch over to Editor so you can see how the app is organized. We started by defining the four key inputs the app needs in order to estimate tax savings: company revenue, owner salary, other expenses, and state of operation. Opal automatically generated workflow based on these inputs. Each block represents a step in the logic. The app takes the user's information, researches state tax considerations, performs the tax calculation, and then generates an explanatory result. The workflow processes information step by step. Research state tax information. This step analyzes the state selected by the user. Formulate calculation instruction. This prepares the formula that uses revenue, salary, and expenses. Perform tax calculations. This calculates an estimated tax savings. Generate explanatory guidance. This creates a simple explanation using the inputs. Generate tax savings results. This produces the final output displayed to the user. This shows the app is fully automated and follows a structured logic from input to output. In the console view, you can see each input field and each step of the workflow listed in order. This confirms how data moves through the app. Now I'm switching to the live app preview to show the user experience. When the user enters the revenue, salary, expenses, and state, the app automatically processes the information using workflow logic and generates an estimated tax savings result. I'll start with a small business earning around $150,000. After salary and deductible expenses, the model estimates potential tax savings for this scenario. So overall, Taxwise was built using Opal's automated workflow system. The app collects four financial inputs, uses a multi-step workflow to calculate potential tax savings, and then produces a clear result to help business owners make better decisions. This concludes my technical walkthrough.
Hello, everyone. My name is Wilmer Espinoza, and in this segment, I'll be demonstrating a real-world business scenario using our app, Taxwise. In this example, I'll step into the role of a business owner, inputting financial data into the app and using the results to make tax-smart business decision between S Corp and LLC status to see which one it's better when you file your taxes as a business. For this demonstration, imagine that the business is a small consulting LLC called Bright Path Marketing. The company operates in the state of Florida and it specializes in marketing services for e-commerce stores. Example, Amazon, eBay, etc. The owner wants to estimate how their financial services decisions, especially how much salary to take and how much they can deduct in a business expense. This will influence their tax liability for the year. Instead of waiting until tax filing season or paying a CPA company for consulting in advance, they can use Taxwise for instantly evaluate the tax savings scenarios between the two. This is the actual app, Taxwise. Once again, estimates tax savings for S Corp versus LLC. We're going to start the app. The first part, it says enter your company's annual revenue. Once again, we're going to start by entering the company's total yearly revenue. For this demonstration, we'll use a realistic number, for example, $460,000 in annual revenues. And we input 460,000 annual revenues, and we click the next button. Enter your reasonable owner salary. For this example, we're going to enter $95,000 as the reasonable owner's salary. And hit next. Now we enter the deductible business expense, which includes software subscriptions, marketing tools, continuing education, website hosting, travel for trade conference, supplies, anything that you need as a business expense, etc. For this example, we'll enter $121,000 in deductible for business expense. This is the good thing about this app. It could be used in any state. But for this scenario, for this example, we're going to use the state of Florida. Yes, we are located in Florida. Now the app is doing what the app is created for. It's going to evaluate the amounts and give you a better explanation for both, S Corp and LLC, and depends which route you want to take. While we wait, because it's going to take a couple minutes, as soon as these inputs are entered, Taxwise automatically estimates potential tax savings, and explains how each of these variables, revenue, salary, expenses, and state, factor into the tax estimation. The app explains, for example, that Florida does not have a state income tax, which can create savings relative to a similar business operating in states like California or New York. It also clarifies how the level of deductible expenses affect taxable income and shows an estimate of how much tax burden the business may be able to reduce through proper expenses classifications and salary structuring. And this is just going to take a little longer for the app to come up with the actual amounts. But let's continue with more information. With the results, the owner of RidePad Marketing can make practical decisions. For instance, the app might reveal that increasing deductible technology subscriptions or increasing mileage travel, a client could result in higher allowable deductions. And that's a lot of money that the company could save overall. And here we go. The tax savings report, LLC versus S Corp in Florida. Estimate tax comparison. Estimate total tax for LLC is $108,791.40. Estimate total tax for S Corp is $96,056.12. Estimate tax savings with S Corp is $12,735.27, which, at the beginning tells you that you're going to be saving $12,735 if you file as S Corp, which it doesn't, that's a huge savings for, a small company. Let's see some of the key factors, fundamental differences, S Corp versus LLC. The limited liability company, let's see what we got. Let's get to the, okay. It pretty much here just explains what, the definition of, the legal business entity offers pass-through taxation, limited liability. And then we go down to S Corp Corporation, which is the same, it gives you a definition, a federal tax classification, then an LLC or traditional corporation can elect not a legal entity type itself. Let's keep going. Implications for Florida operations. Here we go. Company revenues, once again, is $460,000. Owner salary was $95,000. Other expense, $121,000. LLC, net business income, same thing, $460,000 revenue, $121,000 in other expenses, minus $121,000 expenses equals $339 with net business income, $339,000. Self-employment tax burden, the entire $339,000 is general subject to federal, SE taxes. Federal income tax, net income less half of SE tax deductions and standard deductions is subject to federal income tax. Now, comparing to the S Corp, reasonable salary requirements, owner must pay themselves at reasonable salary. In this scenario, we have $95,000 as a reasonable salary for the owner, which designates the salary. This salary is subject to federal payroll taxes, FICA. The administrative burden increases overhead, including payroll processing, filing form 1120-S, and more stringent record keeping. Explanation of estimation tax savings. The estimation tax savings of $12,735.27 with the S Corp is elected as primarily due to the reduction in federal self-employment tax. The LLC, the entire net business income, $339,000, is subject to both the employer and the employee portion of Social Security and Medicare taxes. S Corp, only the reasonable salary of $95,000 is subject to FICA taxes. The remaining profits distributed as non-wage distribution are exempt from self-employment taxes, leading to calculated savings. So in other words, it just explains that, with the app, you could possibly save $12,735 when you file, and you get the knowledge when this happens. Impact of Florida state information. Florida tax environment significantly influences these calculations by the absence of certain taxes. no state personal income tax, minimal state entity fees, and no state corporation income tax. In summary, for a business with the specific revenue and expenses structure in Florida, the federal self-employment tax savings achievable through S Corp election are primarily driver of tax deductions. Florida lacks the state personal income tax, amplifies these savings by not adding an additional state tax layer. As we could see, after calculating, the amounts, it shows you that, filing S Corp saves you $12,735.27 in this scenario, which is a pretty good app, and it's good. Once again, my name is Wilmer Espinoza with Group 5, and thank you for your time.
Hello everyone, my name is Christian Rufin, and in this segment I'll be demonstrating a real-world business scenario using our app, Taxwise. I'll help step into the role of a business owner and show how entering a few key numbers helps estimate whether switching from an LLC to an S Corp could lower taxes. Now for this demonstration, imagine the business is a small home services company called Suncoast Solar and Roofing LLC. The company operates in Texas and installs residential solar panels and performs light roof repairs. The owner wants to know whether electing S Corp status would reduce their self-employment and income tax burden, and what a reasonable salary level should be. Instead of waiting until tax season or paying for a full consultation first, they can quickly test scenarios in Taxwise. Now let's start by entering the company's total annual revenue. For example, in this case, we're going to be using 780,000. So you go ahead and input and click the arrow. Next, we're going to use 135,000 as the reasonable owner's salary. Now we're going to enter business expenses. These include materials, subcontractor labor, fleet costs, tools, insurance, software, advertising, and office expenses. For this example, we are going to be using 410,000. Lastly, we're going to enter Texas as the company's state of operation. So now in a couple minutes, the app is going to automatically calculate estimated payroll taxes and income taxes under both an LLC and an S Corp structure, and then show us the potential difference. This will only take a minute or two. It's very important to use an app like this. That way you can save money. And instead of having to pay a professional first, you could come to this app, which is free, and get a more or less of an estimate of which side you should be looking on. Should be finishing up in 7 minutes. So with all these results and all this information presented, Suncoast Solar and Roofing can make practical decisions. So here we have the comparisons of the LLC versus an S corp for an owner that wouldn't be knowledgeable. For example, right here, LLC is a flexible structure combining corporate and partnership sole proprietorships elements. Owners are called members and can manage directly or appoint managers. Now, for an S corp, a federal tax election for a company or an LLC requires corporate formalities, bylaws, board meetings, and ownership via stock. So this just pretty much compares the two, just the definitions. So we have the owner's compensation with SE tax. So for the LLC, the entire net profit passed into owners is generally subject to federal SE taxes. And for the S corp, it requires owners actively working in the business to pay themselves reasonable salary. So subject to FICA taxes. Okay, as we go down, it's gonna go ahead and show us our potential savings. So as you can see, on this left side, we have the LLC and saying that the tax burden will approximately be 30,815.56. And for the S corp, it will be 20,655. So obviously, nobody wants to be throwing away unnecessary money, especially on taxes. So saving 10,160.56 is a significant difference. This company before was an LLC, so with these potential savings and all these results, it should be obvious on what they're going to do for the next tax season. Okay, so this app also presents some key takeaways and considerations. For SE tax savings, the primary financial advantage of an S corp in this scenario is the reduction in federal self-employment taxes by paying a reasonable salary and taking the remainder as distributions. For federal income tax, federal income tax is not included in these calculations and depend on individual tax circumstances. Reasonable salary, the IRS requires S corp owners to pay a reasonable salary. The 135 figure is an example. Determining this amount requires careful consideration and is subject to IRS scrutiny. This is important information that the owner has to take into account. For administrative costs, S corps typically incur higher administrative costs, payroll processing, accounting fees than default LLCs, which should be weighted against potential tax savings. So the app shows meaningful savings. The owner may or may not choose to switch to S corp, but I think it's pretty obvious that they will. The owner could test what if salaries as well, so they could also go back and switch the reasonable salary for example to like 120,000, 150,000. They could play around with it to see how it affects the payrolls and distribution. In addition, the owner might realize that tracking additional deductible expenses like equipment, depreciation, or mileage could further reduce their tax inflow. This is something to keep into account. In short, the app doesn't just give a number, it shows how revenue, salary, expenses, and location work together so the owner can plan ahead. In real world use, a business owner could run multiple scenarios in Taxwise before making payroll or spending decisions. This helps reduce tax surprises, avoid underpayment penalties, and improve cash flow planning. For growing services businesses like this, identifying even 7 to 20,000 in annual tax savings can support hiring, equipment upgrades, or even expansion. They can reinvest into their company and have a better year. So yeah, another thing to keep into account, we selected Texas for example. Texas has no state income tax. Texas does not impose state personal or corporate income tax on S corps or LLC. So this is also important to know where you are in terms of the taxes. Texas is one of it's obviously not all states offer this. Another thing about Texas is with a revenue of 780,000, the company is below the no tax due. threshold of 2,470,000. Therefore, neither an S corp nor a default LLC would owe Texas franchise tax, though an informational report is still required. So all in all, that concludes the demonstration of Taxwise for a small business tax planning support. We saw how just entering 4 core inputs: revenue, owner's salary, deductible expenses, and the state lets a business owner quickly evaluate potential LLC versus S corp tax savings and make smart financial decisions. That concludes my presentation. Thank you so much for your time.
Good afternoon, everyone. My name is Woodland, and today I will be presenting one of my scenarios for the project using Taxwise as for solution. Super excited to introduce Taxwise, an intelligent tax management platform designed to help business owners organize financial data, analyze real-time tax, and make informed decisions with confidence. The company that I'll be using is Sunshine Mobile Detailing LLC. The business entity is single member LLC, industry automotive services, mobile detailing, state of operation Florida, years of operation 3. Freelancers often struggle to estimate how much of their income they actually keep. After entering the project revenue and eligible deductions, Taxwise shows me that the taxable income and estimated federal tax. The report helps me realize that without these deductions, the tax liability would be significantly higher. This allows me to accurately price future projects and avoid underpayment penalties. How the owner uses Taxwise. Marketers often the Taxwise the Marcus opens the Taxwise app at the end of the quarter to review his financial performance. He enters his revenue, expense, mileage, and new equipment purchases. Taxwise automatically analyze his data and alerts him that switching his vehicle deduction method will save almost $2,100 this year. Using this insight, Marcus decided to invest in a second portable vacuum system and bring on an additional part-time worker during peak months. With TaxWiser projection, he confidently adjusted his estimated tax payment, avoid potential penalties, and the app helps him plan expansion while maximizing deduction taxes credits. Tax-wise output simulation. Tax saving opportunities identified by Tax-wise. Increase vehicle expense deduction by switching from mileage to actual cost. Potential saving $1,800. Section 179 full depreciation on a new detailing equipment saves $945. Claiming work opportunity tax credit for part-time employees save $1,200. Adjust estimated tax payment to avoid $350 on the payment penalties. Optimize home office deduction using exact percentage method. Save $240. Taxwise isn't just a calculator. It is a decision-making tool. It gives businesses owners clarity, accuracy, and confidence when planning finances. With an easy input, clear reports, and a real-time tax estimates. Our app helps users spend less time worrying about taxes and more time growing their businesses. As an accountant or financial analysis, I use Taxwise's reporting featuring features to help clients understand trends over time. Here we are comparing the retail store's last 3 months to identifying cash flow issues. It is in the freelancer scenario, which shows how deductions reduce taxable income by nearly 18%. Taxwise gives small businesses actionable insight: what months were profitable, when to save our taxes, and how to plan budgets based on real data. Taxwise turned complex error, phone tax, and financial management into a simple, actionable decision making tools for markets. Doesn't just calculate taxes, it guides smarter financial decision, maximizing saving and support businesses growth, all while saving time and reducing stress. How Taxwise solves real problem for business users. Business problem: missed deduction, overpaid taxes, complex tax calculation, quarterly payment, unclear financial insight, planning growth and investment. How Taxwise solve it: automatically identifies all eligible deduction, automates calculation and estimated tax liability, provide actionable insight on expenses revenue, shows tax impact of purchases and depreciation option. Example and impact: save $1,800 by switching vehicle deduction method, avoid $350 penalty for underpayment, flag overspending on a payroll and low marketing, purchase second vehicle system by tax benefits. And also, to finish with my scenario, the simply complex tax calculation problem: quarterly tax payment, estimated liability and worth, and net profits adjustment can be confusing, especially when business review. Taxwise solution: it is automates tax calculation, estimated quarterly payment, and project year end liability. Markets can adjust his payment in real time, avoid penalties. Provide actionable financial insight. Problem: knowing where the cut, cost, and invest. It is difficult without proper analysis. Tax solution: the app analyze expense, review trend, and investment. For example, a flag that markets is overspending on a payroll during slow month and suggests reallocating marketing spend towards higher performing channel. Problem: business owner often struggle to plan expense or equipment purchase without knowing tax implication. Taxwise solution: by showing potential deduction from the new purchases, section 179 depreciation. The financial data: the annual cost, revenue, the cost of goods sold, operating expensive, total operating expensive, network before owners pay, owner salary distribution, estimated tax liability. To create a fictions business with a realistic, internally consistent data for use in a Taxwise app, providing all the following details clearly in a list format, which is business informations, financial data, annual, owner information, taxes, relevant input.
Hey, it's me, Daniel again. We're just going to kind of wrap up Taxwise. So Taxwise, in my opinion, is a very rudimentary app. It's super basic, but it was designed that way primarily just to kind of, be easy for the user to understand. Going forward in the future, it's something that I feel has the potential to grow more. Right now, like I said, it's rudimentary, it's basic, it provides basic examples, basic scenarios and gives you what it can find practically anywhere on the internet. And while that's all fine and dandy, you got to take into account that, it's kind of going off of these sources of just people who, just anybody putting anything out there. It's not directly going to, say, for instance, the US's tax website. Like, it's not going off of any of that of the IRS website. It's using the IRS website, yes, but it's also using, things like Quora, Reddit, any type of like forum that pretty much would populate with the name tax in it or relate to LLCs or any of those buzzwords that you saw throughout the examples that my teammates provided. It's just going based off that. So that being said, I think that while there is what is rudimentary, there's still a lot that can be done with the app. Um, I think it would be very beneficial to have it kind of only utilize things like the IRS or, legal papers that have been provided by the IRS or tax cases, things of that nature. I think being able to fine tune it so that it's only utilizing those and making its assumptions based off those would be one of the biggest right steps we can go going forward. That being said, I think it's overall still, it'll provide a good impact to small business owners, especially people that are just getting into owning a business. Not everyone knows, and while some people just kind of go in um, directly in with minimal knowledge, I think that having a tool that can literally just, you input numbers and it populates whole calculations that you yourself may not know how to do. And being able to just kind of get your foot in that door and getting a basic understanding. And for when you're ready to go and actually speak to people, professionals, for instance, once you're ready to speak to them, being able to kind of just know how to keep up in the conversation and not sit there and just listen and kind of, have things go in through one ear, out through the other because you're not able to kind of keep up with the terminology. I think that's what this app thrives in by providing that baseline information, giving you an idea of how taxes work where you are and things of that nature. That being said, again, the app is still rudimentary at best. It has a lot of potential in the future. And another disclaimer again, this app is by no means legal financial advice. This app is strictly a tool to help provide you information on hypothetical scenarios based on whatever data that you give it. Because at the end of the day, you would not solely want to go based off of what the app uses. I mean, it uses four baselines that are pretty good in helping to determine, but tax is such a nuanced, um, it's such a nuanced thing that, those four baselines don't do you much good beyond calculating a chance, possibility. You should still most definitely seek legal financial advice, whether it be from a tax professional, tax lawyer, whatever the case may be, whatever works for you. Um, you should still definitely seek that and just use this app as sort of like an aid. And yeah, that's all I have to say about the app. And thank you. Have a great day.